morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, October 6th. All right, so we had a little bit of movement to the upside. Again, the pundits, if you will, and the large mutual fund, hedge funds, and really, quite honestly, the Fed. They just don't want to let the market go down 2 days in a row. They're inflating this market, waiting for this election to be done, assuming that Hillary Clinton is going to be the next president. No, this is not a political um, video. Obviously, this is a market video, but I wanted just to point out that's what's really going on. No one knows for sure, but if you're looking at price action, every time we get to a critical level, the S&P futures get bid up in the pre-market session. So nothing good out there at all, guys. Nothing good out there. Europe is in big trouble. The banks in Europe, Italy. Greece, you have the Brexit now coming back into play, but yet the FTSE made all-time highs. It's just absolutely insane. It's mad for what's going on out there. But what happens? All good things come to an end, and I am not talking doom and gloom here. All I'm saying is be very, very careful. At any given moment, this thing could fall apart to pieces. This bull market is very mature. We're at a fully valued market here. The dollar looks like it's ready to explode higher, which I'm going to go over. And these are just little caveats that you need to really be aware of what's happening out there. So just please be careful. Gold is breaking down pretty hard here. We talked about gold. I'm really, really liking gold. A little bit lower, but I'm really liking gold to start looking to nibble into the long side. But again, you don't want to be catching a falling knife, and you want gold to stabilize and create a new base, form a base first, and break out of that base. That's really the best way to handle a trade like that, especially as it's been crushed the last few days. I'll tell you where gold may be headed, and we'll be taking a look at that. Crude oil, got a bunch of emails. I would not be looking to buy oil at 50. They're looking to price. They're looking to kind of stabilize oil right around here, 45, 50, even $55. But that's pretty much it in oil. And you had a 7-day run in oil at 50 at major resistance. Please do not buy oil at these areas. Let it come in. The first breakout, you always want to let it digest the move to see if it is even for real. And if it does make a higher low from that breakout point, then you look to buy it, and you can actually build a small position in it. But don't buy oil at these areas. Let it come in. I'm looking at crude right now, somewhere around $45 to $46 for the next pullback. You're looking at some roughly about a 3 to 4 handle move that lower. And $3, $4 move lower back into the $46 range. Let it base a little bit, and if it does break out of 50, it'll go to 55. But that's what you really want to pay attention to. You don't want to buy the $50 breakout. Usually, the first breakout is a false breakout. So, just want to let you know about oil. Let's get right into the charts, guys. All right, we have the dollar UUP ETF. We are 2 days above the ascending triangle. Very, very bullish. Very bullish. If we close the second day, which is actually the third day today, we had the first breakout. Okay, now we have one more day. We close above this symmetrical triangle. We will definitely, more than likely, challenge the highs. I shouldn't say definitely, but we will more than likely challenge the highs here at 25.25. That'll put continued pressure on gold. And believe it or not, I do believe that crude oil, that will definitely take a punch out of crude oil. Walmart reported their numbers this morning. Very dismal, very dismal. If the consumer is dead, or let's say not spending, you don't need oil, right? Or there'll be a lot of oil because they're not driving around and going out to dinners and going to the mall. So you got to be very careful with that oil, okay? Anyway, but the UUP will definitely hinder on any big moves in the commodity quadrant. GDX, you could see here, we have, and this is basically, again, guys, this is all of our premium videos that we get for our subscribers. I just wanted to show this to you. I showed it to you yesterday. But you could see this is a daily, these are daily, so these are very big and very powerful areas here to watch. But looks like this area here is going to be the next target, right up in this area of 20 to 22. I like the $19, $20 movement in this little area, this little consolidation before it broke out. I'd like to see that hold. Okay, so that's something I'm going to be paying attention to in the GDX. As far as GLD, we pretty much hit the target. We're almost there on this double top formation. This is going back all the way back from July, from June and July, guys. And look at that. We're right there. I mean, give or take, you're probably looking at about 60 cents. And oil is, gold, sorry about that. Gold is down today again, so we'll probably hit the target today. And that's going to be in this the double top formation, coming breaking off of this descending triangle. Where do I like the gold? I really like to see this area hold 120, 119, or 120. Even if it got back down in here, 117, I like to see the GLD hold. And we're looking at somewhere around 1250 to 1280 needs to hold in the GC, the gold futures contract. If we lose 1250, you'll see 1200 real quick. All right, and then we've got to look for, is this just a correction, or is this actually a major sell off going back down to the low? So that's where we got to pay attention. That's why you don't want to buy gold at the moment. Right into the get right into the indexes. S&P spiders. You could see here. I again, this to me is a bear flag. Nothing more than a bear flag. I like to see his break. This is going to be this low here, and then ultimately this low here. I like to see that 212 and change break, and then we're going to see the 210 handle here. That will coincide nicely with the 200-day moving average on the daily chart. Next, we'll take a look at the 60-minute spiders. You could see here that we're just basically chopping around, guys. I mean, yesterday we gapped up, and all of the gains was yesterday's gap, as well as pretty much. If you see here, we always gap up or gap down. You maybe get a couple of days of movement, but it's just been a dismal trading environment for the last 3 months. You can see here. I mean, we just, we gap down and we create a whole new range. So, but I am looking for lower prices. The TMT trading model is still on its sell signal. Transport's looking pretty good. Took back the candle. It needs to take out this area here. Once it takes out this high, then we're gonna end up going pretty much higher, and that would probably buoy the market as well. IWM, you could see that here. We're just kind of sitting around inside day for the last 6 days. So we've been trading inside these candles here. So we really need to either break out or break down here. Next and last is going to be the Qs. Qs are holding up rather well. Tech has been doing pretty good, so we want to watch what Tech does. Watch the VIX too, guys. VIX at these low areas here at one point in time. I think you're gonna see VIX really explode. That index, excuse me, or that instrument, that trading instrument, that VIX, is heavily shorted right now. You need one little chaotic event, and the VIX is going to explode. So just be careful with that one too, okay? But watch it for ideas of what's going on with the market sentiment. Okay. Have a great day, everybody. We'll see you tomorrow. Take care.